Yo, what's going on, everybody? Welcome back to another video on the channel, and today we're going to be taking a look at SPY on today, the 12th of January, and just taking a look at how I would have traded SPY today if I did. You guys know that I often don't trade. Usually I can only trade during breaks and during times when I have less school, and so far in 2023 I've been very, very busy, but I still show you guys how I would be trading this exact chart right here, even if I'm not actually taking these exact trades during the day. Okay, but let's just start. Let's just get right into it. Again, I'm gonna skip charting all the pre-market levels because, again, I find that repetitive. But today we did have kind of a choppy day in the beginning, and then we kind of made a move up and down, and we basically closed like a couple, cents above our open area. So we kind of were flat today. I'm finding that the price action in 2023 so far, like these first 2 weeks, have been pretty off. But I think as we break out of these ranges, we can slowly start to see better price action pick up. But so basically right out at the gate, all right, we kind of had this doji candle right here indicating indecision going on, all right. Then we kind of broke through, all right. None of my setups are visible here. We're not breaking any support, and we're not retesting that support, okay. We're just flushing through. I'm not a momentum trader. I don't take trades just because we're moving down. We move down, okay, we break this support level, okay. Now, I don't know where that, sorry. So we break this support level right here in pre-market. We break it with 351K volume. You can find that right here. And this is the default volume indicator if you're unaware. So we break that with 351K volume. Then when we come up to retest it, we have 264K. There's two candles. This right here is a pretty nice put entry. Yes, you had to wait. Yes, you had to be patient during this move down and only take your entry after we broke through the level and retested right here at that support. Yes, but that makes your win rate much higher if you take high quality A+ setups that work. Now, I wanted to talk about this misconception here that a lot of people were looking at this trend line and looking to take puts. Now, even though this does validate as a normal trend line, we have a rejection, and this is kind of the third rejection. This is way too small of a trend line. I'll explain one thing. We made this low. We had one candle basically come down and then get scooped up right back here. Then we came down one candle right up here. This is too small of a candle formation for me if we have already made a big move down. If you logically think about it, we made a move down. We have already exhausted this move down right here. If we've exhausted this move down right here, okay, we are probably not likely to continue just dumping right down. And if we start to make these very tiny trend line kind of formation, this might be a sign that we are failing to move lower, getting bought up, and we are about to move up. That's why I would not enter this trade. If this trend line would have happened somewhere right here, I might have considered taking a lotto entry. But because this was such a exhaust after such a big move down, I'm not taking it. All right. All right. Hopefully that kind of explains it, but yeah. Just delete this, okay? Now this right here, all right, this was a trade that was there, all right? This was a pretty weak support, but it was there, all right? We broke down, we retested, you could have taken puts. Now, we had 307K volume here. We had 328K volume here, all right? So we did have more volume here, but I do understand that you probably would not know that when you were entering because we probably did not have the full volume when the candle touched. However, this is just by default not an A+ setup for me because of this formation. Whenever we have a move down, I want to see a normal retracement back to the level. not a move down, and then this weird consolidation right here movement. Because logically what this means, we tried to move lower, we came up, buyers tried to push us up, but no, sellers won. At this point, sellers are winning. But buyers right away, they came up and swung it up. Then, I don't know what happened there. Then the moment that we break this trend line, we are already reversing those previous highs. This just doesn't look like a great setup. Okay. Oh, it keeps doing that. Okay. Now moving on. This is another misconception. Okay. Volume right here, 454K. Volume here, 374K. You're not entering this trade because of volume and because we have already broken all these highs. We have literally already broken this massive resistance level. We're in already an area where puts aren't really looking good. Okay. Moving on, we kind of have this chop. At this point, I'm understanding that we're in a slight range. And I'm like, you know, maybe I want to wait until we break these highs. And maybe I'm not going to trade. You have to understand, if you want to take A+ setups, price action is not giving that to you. Imagine that, like today, for a big portion of the day. You just need to not take a trade. There are successful traders that take 10 trades a month, and that's it. Just because the market is printing candles does not mean that you need to take an entry. But you could have played flag plays here, you know, between this chop if you really wanted to. We had a resistance, we rejected. You could have been taking it on those flags and caught a couple of those moves down. This right here would probably be my favorite flag play. We have a clear flag, clear rejection of that resistance, and we come down. Okay. Now this right here is an A+ setup. All right. This is something that I would call a good entry. We have a clear support on the bodies of these candles. We break down 359K volume, a really nice volume. We go down. We start having a pullback. All right, with much less volume on this candle, wicking off that area, I would take puts. Now, people are like, no, this trade didn't go well. This trade went perfectly well if you took this trade. Okay, the way I trade is I get in and I get out pretty quickly on a big portion of my position to lock in my profits. If I got in right here, look at this. Where do you see the nearest from here? All right, if you got your entry here, right, on this candle, where is the nearest body support? It's right here. That body candle had support. Look where this candle found body support. Now, if you look more, where is the nearest wick support? Right here. That's exactly where this candle found support. So you need to understand, if you're taking puts here, you need to be scaling at these support levels, especially this resistance level that could easily turn into support. Okay? So you need to be paying attention to that. And if you took puts right here, that's at 395.41. You want to scale some at 395.07 because that is a clear resistance and it's that body support. That's a 40-cent move. That's a nice 10% at least on your options, on your 0DT options. That's good. And if you scaled more into strength at the break of that wick, that would have been probably a solid 15-20%. I'm not exactly sure. This is a good trade. After 15-20%, you should have scaled at least 80% of your position, 75% of your position. If you're entering 10 contracts, you should have scaled, 6, 7 contracts at this point. Okay? Then you set your stop loss at the break above, and then you would have gone out with the rest of your contracts right here. Now, worst case scenario was this trade would have given you a break-even outcome. If you scaled 50% here and then you got out here, technically you could have went break-even. But this should not have been a losing trade for you. Okay? And break-even trades are fine. They will happen. You managed your risk correctly. You saw this massive candle come up. It closed right here. You got out. All right? Even though this is only 20 cents of a stop loss that you would get out, and this is already 40%, I'm not even talking about that. But if you for some reason could not get an entry right away. You managed your risk poorly. This at worst should have been a break-even trade. Next up, we move up. All right, we're kind of rejecting along this old support as resistance. This doesn't qualify as an entry because we already invalidated it here, but come down. This right here, another misconception. This is the exact reason I do not take one candle pullbacks. We have a clear resistance right here. Okay, we come down. All right, and we come to that area. All right, now this candle did not come to that support, that resistance that I will be playing off of, but I had this right here just to show you guys that this candle basically came right within this area. Okay, it was kind of close. It was too big of a one candle back to our resistance. There are, exceptions. You could say this wasn't exactly a one candle pullback because we did not come exactly to that area with that first candle. But if you really look at it, the majority, this whole move was covered all by one candle. If you see that happen, and if you see the one candle pullback basically come within the wicks of the resistance you're playing off of, you can really call it a one candle pullback. Now, even if you did not know that it's a one candle pullback, all right, you can see that this volume is 199 and this volume 182, but this volume, if you're playing the candle that actually touches it, it's 297K. And this volume, most likely, I'm assuming, I was not watching it exactly live at this moment, but I'm assuming it print hella fast. It went down very fast. And if that happens, if you see a flush candle, you don't take your entry. You want to see the candle wick off your area kind of and see a little bit of that bouncing motion, okay? Or some sort of indication that this candle is not about to burst through, okay? This right here, another one candle pullback, all right? We have this support. Now, why am I not using this support? Because this support happened earlier than this one, more recent to this. We had a support, we broke through, we're retesting. If this was two candles, this could have been a nice put entry. It was only one candle, I don't take it. Now, at this point, what I notice, overall, this is what you have to notice, is that we're in a sort of range between this 394 and this 396 level up here, 397 almost. We're kind of ranging with no real motion. I don't like playing ranges, and maybe at this point I'm like, okay, I'm going to stay out of it right now because we clearly are going back through the same areas right here, and we're going to be taking all these little entries that don't make much sense. So at this point, I'm not trading. I'm not looking to trade, and you should not either if you're playing my style, okay? You're not trading a range like this with these tiny candles going back and forth. You need to read price action, okay? You need to read price action. We're going up. All right, now this right here is one of those entries for calls that I want to discuss. This would not be a trade I would personally take, but if you like to take a little riskier entries, more lottos, this is an option. The reason this would be a lotto for me is if you notice, it's kind of a one candle pullback. This first candle that came down basically touched this level, came within 5 cents. 5 cents with me qualifies as a touch. I find that charts often have a 5-cent variation. So usually if, price touches within 5 cents, I consider it a real touch. Okay. This is why I would not be taking it. One touch, too quick of a, pullback after the move up. I don't like that. Okay. But a lotto, it's okay. For me, this would be fourth of my position size. If I'm taking 30 contracts on this trade, I would take something like 7. If I'm trading 10 contracts, like some people in the community, 10 contract, you'd be taking like 3 on this. If you're trading 2 contracts on this on your normal positions, you're not taking this trade. And the unfortunate reality is if you are taking less position sizes, there's not a much variation for you to take smaller sizes. And that's just the reality of learning. When you feel, and I'm telling you only when you feel, and you can risk money that you can afford to lose, then start to trade with more contracts. All right. But trust me, when I started, I played with 1 to 2 contracts too. I took only A+ setups, and I managed to grow my account, grow my knowledge, and then scale up. I do acknowledge that that is hard for a lot of people to scale up, but nothing that's worth doing is going to be easy. We move up. There's no real resistances, supports that we're retesting. Nothing's going on. So I would probably not be trading this. Now, we do have this trend line right here that I did want to mention. This entry for me would probably not happen because this trend line is a little loose and I would not know that we're rejecting, bouncing here. But right here would be a pretty nice call entry. We have a clear resistance. We break up. We kind of come here and we move up. The only reason I don't like this too much is because we have a resistance, we move up, and we kind of come down. Not the greatest formation. The only reason this trade for me would be A+ and not a lotto is because of the supported trend line. There is a supported trend line. We have that formation. So we have 2 convictions minus the 1 kind of not great conviction. You have to think about that. How many convictions are supporting this trade? Okay. Pretty nice call entry. I would take it right on this candle when it approached right here. Okay. Then, where would I set my stop loss? At a break of that resistance level. Okay, this clear resistance right here. All right, break and close below. I mean, below this resistance. That turning into support right here. Okay. So, yeah, that would have been a pretty nice trade as well. All right, we're chopping around. There are some flag plays you could have been playing right here. You know, if you wanted to, we had a clear resistance. You had this trend line. All right, you could have taken puts at that break, okay? So I'm showing you guys all the possibilities of trading my style. Now, this right here is something I wanted to mention. This right here for a put entry is not a trade that I would ever take, and this is a bad trade. I only take flag plays if we're resisting that area. We would turn around here and break. If we're breaking above and we're just breaking some random trend line, that's not a reason for me to enter a setup, okay? And a lot of people confuse this, but this is very important. Kind of make this massive move down. I'm staying out of it when this is happening. I'm not taking any random trades just for the sake of doing that, okay? Now, if you notice, we break this support. Now, why am I playing this support? Or actually, probably at this point, I'll probably be playing actually that support because it was backed up by that resistance. Usually, I would play the most recent support right here, okay? Or even that one. This one is just a little too close to the entry, to the move down. And this one doesn't have that resistance validated, so I'd actually probably be playing that one. But look, we break down with 242K volume. We retest with 211. This looks good, except you forget about this pattern. We have this double bottom. We go down. We try to move lower, but no, we get bought up. When this happens, I'm not taking any good position size trade. Remember that. Okay, so we're moving up. We have this trend line. All right, flag play. We break that trend line. We have a resistance. We have nothing in between happening here. And you take your put entry and you ride it down. Awesome trade. So, at this point, I wasn't watching the market, so I'm not just going to go here and just give you guys some random trades that I see right here, but it was overall choppy. It was not much was going on here. It was kind of, just kind of back and forth going through these zones right here, okay? But one trade somebody in our community took, and I wanted to mention, was this one right here for puts. If you have this support level and you break down, ideally for it to be an A+ setup, you want to see a break, and you want to see right away red candles to end and green candles to start printing. Come up here, you take your put, and we go down. Okay, that's how you want it to happen. In this case, we came down. We kind of had this candle basically approach that support. Okay, so that's already not great. It's a one candle, and that's not great. Then we actually had that bottom. We tried to move lower, but no, we got bought up and we came down. That's also not great. So this is a lotto entry, okay, because of those reasons. Then basically that's it. We kind of try to move lower, nothing happens. And overall, I don't like to trade the last 30 minutes of the day. After, in the last hour, I sometimes take trades, but usually the last 30 minutes, I'm not taking trades. Contracts are very, low, all over the place, volatile. What's the real point? If you can only trade power hour, I guess you need to learn to take more, contracts that are farther away from expiration, because you can't be taking 0-day expirations even after 3, really. All right. But yeah, that's kind of covers the day for me. If you guys did enjoy this video, find any value in this, I really hope you guys do enjoy these. Make sure to smash a like button and subscribe if you haven't already. Join the Discord community in the description, where we do all of this live, where I teach all of this. We have, everything going on there. So do be sure to join that. Thank you guys all for watching, and I will see you guys all in the next one. Peace out.